Most traders think market move because they have drawn trend line, they have drawn an order block, they know some indicator, things of that nature. In 60 seconds, I'm going to show you what really moves the market and one of the term of market mechanics and behavioral finance that moves the market. There's a term called risk on, risk off. The short form for it is RORO. Now, what is risk off, risk on investing? Risk on, risk off investing describes how investors' risk tolerance affect the market activity, how it impacts market decisions, and how it impacts any assets prices, and how it impacts investment decisions of the big corporations and big market participants. In a risk-on environment, market participants favor high-risk investment, and in a risk-off environment, market participants flee from high-risk investments and go to safe haven investments. And this drastically affects how prices move on any of the instruments you are trading. Let's say if the market is in risk-on move, that means that all of the investments are going to be risky. Investors feel safe, all of the economic data are doing good, everything seems fine, and investors prefer taking high risk to get high returns. But let's say if we are in risk off environment, let's say geopolitical tension is there, the economies are not looking good, there is a lot of fear in the market sentiments, then investor tends to move to risk off investment, and that drives liquidity out of the market, and investors prefer more safe haven assets like gold, like bonds, and investors try to flee from, for example, crypto markets. You will see the stock markets going down and liquidity drains. And if we are in a risk-on environment, you will see all of the equity market rising. You will see people betting more on crypto assets. One of the prominent indication of risk-on or risk-off market environment is the VIX index. If the VIX index is higher than 20, then market is very volatile. Investors tend to flee from risky investment and they go to safe haven investment. And if the VIX is below 20 or below 15, then it is considered that market is in a good position. There is not a lot of volatility, and investors try to move their investments to the risky side of the market. And this is how risk on and risk off investment affect how prices move in the financial market. That's it for today. I'll see you tomorrow for day 51 of 1% Better Trader, a series where we're gonna get better 1% every single day for the next 365 days. So don't forget to follow and don't forget to share.